Good morning. This is Connor from 500 Edge, where we trade SPX 0DTE options. If you want to join the team, link in the description. In this video, I'm going to recap the previous session and break down what matters today ahead of the opening bell. SPX made a fresh record high on Tuesday, but it was another choppy session. We took a total of 2 trades, 2 losers, 2 winners, for a red day, down about $100 in our 1% risk model portfolio. That's about 0.1%. Not a bad red day. The biggest loser came from 75.95 long put for a negative 100% return. This was actually a really good setup, and the trade did materialize. It just took hours, and theta decay absolutely ruined the position. But that's just the environment we're in right now. It's choppy, it's low vol, and obviously not great for single options. Meanwhile, our credit spread traders making tons of money trading this low volatility environment, but we are due for some volatility expansion. So hopefully things pick up here and trading becomes a little bit more easier for those single option strategies. On the session, SPX gained 1.3%, closing at 76.09. Technology outperformed, up 1.25%. Communications, the big underperformer, down 1.8%. Discretionary also red, down 0.5%. However, cyclical sectors green across the board, so slightly bullish, particularly in the morning, but volatility obviously died down. We had a nice move here on the reclaim of 7600, squeezing in to the big supply zone on the upside, 7615, 7620. We also had the previous session's high in here at 7618, which we broke for a brief period, but it was basically an inside day, trading between the previous session's high and low. Now, by 12 o'clock, volatility absolutely died, and this was reflected in the 0DTE volume feed, a very tight range being priced in for the afternoon. This was by 12 o'clock. We had the max call at 7620. That's our upside target and upper bound. And then the max put at 7600, our downside target and lower bound, which contained price in the last 4 hours of trade, closing essentially right in the middle of the two, which is not uncommon. Now, the big loser on the session was the short here, and I shorted relatively early, looking for that reversion to 7600. Now, that trade did materialize. It just took hours, and of course, by the time we got down there in the last hour of trade, those puts have decayed a lot, and I didn't even close them out. I just let them expire. So the trade was not a bad trade. Oftentimes we judge trades by, okay, if it's a green trade, it's a good trade. If it's a red trade, it's a bad trade. But this was a good setup, a setup I do take quite often, playing the call wall and reversion to that big gamma strike, but it just didn't work out here. Now, the second trade, which was the 100% ROI winner, was this nice little rally into the end of the day. And what we were watching here was this tight consolidation range. We traded in a 5-point range for about an hour, and we were looking for just kind of a flush out below that lower bound, which was basically the 5 handle. And once we got that flush out, we reclaimed it. We started going long around there for a nice little move into the end of the day. And of course, in the last hour, those single options can move quite quickly. So it wasn't long until we were booking profits on the up move here. So essentially the break of that high. And then I closed out the last half on the MOC spike here. We were looking for kind of a 15 target. So that trade worked out, a very short duration trade, but this was just an absolute bleed on those puts. But in terms of credit spreads, easy trades, right? Selling at or above 20, at or below the 00, right? 7600 here. That theta decay obviously worked in your favor. For today, we do have some changes, but early pre-market, it is quiet. S&P 500 trading flat, NASDAQ trading flat, and we still have a supply zone overhead, demand zone below. However, on a positive note, supply overhead has diminished day over day via the shift higher in the SPY call wall, which was 760, or SPX 7615, which has capped upside over the past 2 trading sessions. That has shifted higher to SPY 765 or SPX 7665. That is a bullish indication. So 15 may be less important here today. What could be more important is the previous session's high at 7621, A break would imply continuation of the uptrend. There is some supply just beyond that at 76.25, 76.30, but major resistance overhead 76.50. So if we get that outside day, conditions are bullish, potential target, but we'll see where that max call is situated. On the downside, we are trading in close proximity to our transitional zone of 75.95, 75.94. Those are the flip levels. Just below that, we have the SPX put wall at 75.90, more short-dated puts. If we break this zone, potential for volatility to pick up. Previous session's low, 75.83. A break would be a bearish indication. And then below that, we have support at 75.55, 50-ish. And then 75.30, which you probably recall was the upper bound before this recent kind of breakout and grind. Transitioning to our dashboard, total gamma exposure remains positive, 1.14 billion notional. So dealer flows remain very supportive for the market price, buying weakness, selling strength, suppressing volatility. And we can see this relationship via the return distribution chart. The higher that total gamma exposure, the narrower that return distribution. In other words, lower volatility until that trend snaps and we get a decent down day. Now, in regards to that transitional level where we could potentially see downside volatility pick up, that is 75.95. Above, all strikes are positive. That is supportive for the market price. Below, most strikes are negative. That is destabilizing for the market price. 75.90 SPX put wall. That is the strike with the highest net negative gamma. And then we have 76.25, 76.30, some supply here, and then potential upside target 76.50. Now, in regards to these put walls, call walls, we talk about them a lot. They're in play quite a bit. Very good strikes to play as directional targets, as strikes to sell. Very strong statistical edge. I'm not going to break down the stats here, but for members, if you want to get a little bit more insight into that, go to the education module and click on the gamma exposure lesson, and it will give you the full statistics regarding the SPX put wall and the SPX call wall. In terms of catalysts today, we have ISM Services PMI out at 10 o'clock, and then potential for geopolitical headlines. But it is another low volatility being priced into the markets, 0.5%. That is an implied high of 76.47 and an implied low of 75.71.